Welcome to TalkTickers.
We dive deep into earnings calls.
And today we're tackling Tomorrow Holdings Q1 2025 call. We'll break down the key numbers and what's next for them.
Yeah, let's jump in. So Q1 2025, Tomorrow Holdings actually saw a pretty big 30% jump in revenue year over year.
30%? Whoa.
Yeah, hit $213.9 million. Mostly driven by Bitcoin's average price being higher than last year.
Okay, makes sense. But I gather it wasn't all smooth sailing.
Not exactly. Despite the revenue bump, they reported a significant net loss. We're talking $533.4 million, or negative $1.55 per share. That's a big swing from the $337 million profit they had in Q1 last year.
What drove that loss?
Well, two main things. A big unrealized loss on their Bitcoin holdings because the price dipped near the end of the quarter.
Ah, the paper value.
Exactly. And also, they produced less Bitcoin compared to before. Adjusted EBITDA showed a similar story, a loss of $483.6 million versus a profit last year.
Okay, so Bitcoin price volatility really hitting the bottom line there. Any bright spots operationally?
There were. Their purchased energy cost per Bitcoin, just at their own sites, was $35,728.
Okay.
And their cost of revenue per petahash per day, if you exclude depreciation, actually dropped 10% from the previous quarter. So some efficiency gains.
10% sequentially, that's not bad.
Right. And it's important, to remember Bitcoin's price has recovered quite a bit since the end of March.
Good point. So the Q1 snapshot might look worse than the current situation. Okay, so strong revenue, but a big loss mostly on paper due to Bitcoin's dip plus lower production. Still, seeing some cost improvements, let's dig into their strategy. Sounds like they're making some moves.
Oh, definitely. This is really key. They're actively trying to transform into what they call a vertically integrated digital energy and infrastructure company.
Okay, unpack that. Vertically integrated.
Yeah, basically controlling more of the process. They have two main priorities. First, strategic growth focused on getting low-cost energy and deploying capital smartly.
Low-cost energy, always crucial in mining.
Always. And second, pushing R&D in digital energy technologies.
So how are they going after that low-cost energy?
They're putting a major emphasis on securing long-term deals. And a big part of that is this vertical integration model.
Right.
They're talking to governments, big energy companies, US, Europe, Middle East, looking to use excess energy, when demand is low.
Finding those pockets of cheap power.
Exactly. Energy that might otherwise be wasted.
That makes sense. And I think I saw something about off-grid stuff, too, not just relying on the main power lines.
Yes, that's a really significant part of it. They're prioritizing expanding off-grid.
How?
Through partnerships using things like flared gas that's just burned off at oil wells.
Ah, turning waste into power.
Precisely. And renewables, too. They've got that 114 megawatt wind farm in Texas coming online later this year.
Wow, 114 megawatts.
Yeah, it's all about monetizing energy that's kind of stranded or underutilized.
Yeah.
They also fired up 25 megawatts of gas-powered operations already in North Dakota and Texas.
So diversifying sources, moving towards owning generation. That must feed into their cost reduction goals.
Absolutely. That's the whole idea. Own more infrastructure, generate your own power, and hopefully drive down both capital and operational costs significantly.
And we saw that 35K number for their own sites earlier.
Right. That gives you a sense of the target. They already operate 139 megawatts of their own generation capacity.
Okay, so energy is a huge focus.
Yeah.
What about the technology side? You mentioned R&D. I know they invested in Orevine.
That's right. They're a founding investor in Orevine, an ASIC manufacturer.
ASICs being the specialized mining chips.
Exactly. So Orevine is designing more power-efficient chips. Tomorrow Holdings has even started making some custom miners using this tech.
Trying to get an edge with their own hardware.
Yeah. Better efficiency, maybe lower costs, tailored to their needs.
And they're not just keeping the tech in-house, are they? I heard about cooling solutions.
Correct. They're two-phase immersion cooling. They call it TUIC.
TUIC, got it.
They're actually deploying that at customer sites now. The potential is maybe increasing hash rates, getting more mining power without losing efficiency, and potentially lower upfront costs too.
Interesting. Commercializing their tech.
And their software side too, their mining pool and RA pool is apparently beating the network average on block rewards.
So building a tech advantage seems like a clear goal. And they're even looking beyond Bitcoin mining. Something about AI.
Yeah, this is pretty forward-looking. They're positioning their infrastructure, potentially the sites and the cooling tech, to handle AI workloads.
AI inference, specifically.
That's what they said. They're apparently in advanced talks with compute OEMs, hardware makers, for pilot programs.
Using their cooling tech like TUIC for AI servers?
Seems like it. TUIC, and also something called liquid cold plate technology. They see a market for cooling solutions for that power-hungry AI hardware.
That could be a significant diversification play down the line. Okay, let's circle back to the core business Bitcoin. How's their mining operation size and their holdings?
Well, their energized hash rate, their mining power, is up 95% year over year. Huge growth there. Reached 54.3 exahash per second.
Almost double year over year.
And their holdings are substantial. Over 48,000 Bitcoin.
48,000. And they're holding on to it?
They are. They started what they call a full HODL strategy back in July 2024. Basically means they're not selling.
Full HODL. I like that. Shows conviction.
Definitely reflects a strong belief in Bitcoin's long-term price appreciation.
Interesting, though, management seemed to feel the market isn't quite getting it, that the holdings might be overshadowing the mining ops value.
That was a key point on the call, yeah. They think the market might be undervaluing their actual mining business, maybe compared to peers who hold less Bitcoin.
Why would that be?
Hard to say for sure, but maybe the focus is just so much on the Bitcoin treasury value. They see things like increasing institutional adoption and more companies putting Bitcoin on their balance sheets as drivers for future price growth.
So they think the market will eventually catch up to valuing both the mining and the holdings.
That seems to be the view.
Okay, now funding all this. The energy projects, the tech, holding Bitcoin, requires capital. How are they managing that?
They set up a new $2 billion at the market equity facility, an ATM program.
Right, allows them to sell stock into the market over time.
Exactly. They seem to prefer this for flexibility.
Yeah.
Lets them raise cash as needed for projects they think will be accretive, add value, while keeping an eye on return on capital.
Flexible funding. And tying this all together, the energy, the tech, the efficiency, it all comes back to lowering the cost to mine, right? Reducing that hash cost.
Precisely. They've already shown sequential reduction in hash cost.
The 10% drop we mentioned earlier.
Yeah. And they expect that trend to continue. Big drivers are the off-grid power expansion and just general capital and operational efficiencies.
And what's this ARP fleet thing they mentioned?
Right. ARP stands for Advanced ASIC Replacement Retirement Fleet, basically using older mining machines that have already been fully depreciated.
So zero book value.
Right. And deploying them at these very low-cost energy sites, like the off-grid ones.
Yeah.
The idea is that this should dramatically lower their overall hash cost.
Using old gear where power is super cheap, clever, but does that off-grid approach have downsides? Uptime, maintenance.
That's a fair point. And those are potential concerns, sure. Reliability, operational expenses for remote sites.
Yeah.
But management's argument is that the energy cost savings are just so significant and the infrastructure costs lower, especially with repurposed gear, that the IRRs, the internal rates of return, end up being much higher than traditional grid-connected sites.
So they believe the economics work out favorably despite the potential challenges.
That's what they're making.
Okay, so recapping the call overall, a tough quarter financially because of Bitcoin's price drop, but revenue is strong. Strategically, though, it's all systems go on vertical integration, low-cost energy, tech innovation like TUIC and Orevine, and holding Bitcoin.
Yeah.
What's the key takeaway for someone listening?
Well, I think you see a company really dealing with the swings of the crypto market, right? That revenue jump shows the upside potential from Bitcoin's price.
But the net loss shows the risk.
Exactly. It's that volatility. But the strategic shift towards controlling energy costs, developing their own tech, that's about building long-term resilience, trying to be less dependent on just the Bitcoin price cycle or network difficulty increases.
Makes sense. Building a more robust business.
And the move towards AI cooling, even if early stage, suggests they're thinking about diversification beyond crypto mining. Plus, that full HODL is a very clear stance on Bitcoin's future compared to some competitors who might be selling.
A company definitely in transition, facing volatility, but playing a long game.
I think that sums it up well.
All right, let's shift gears. It's time for our This Is Not Financial Advice segment. We take what we heard and spin up an outrageous but plausible trade idea. What have you got for us today?
Okay, buckle up for this one. So you've got Tomorrow Holdings with this massive Bitcoin stash, right? Over 48,000 coins.
It's a full HODL.
And they're committed to holding it. Bitcoin's price has already recovered somewhat post Q1. So here's the trade. It's a pair trade.
Okay.
Go long Tomorrow Holdings stock. The thesis is the market eventually has to fully value that huge Bitcoin holding Plus, they're improving mining operations, especially if Bitcoin keeps climbing.
Right. The potential re-rating argument. What's the other side of the pair? The outrageous part?
Literally half. Simultaneously, you short the stock of a mining competitor.
Right.
Specifically one that has been very public about selling the Bitcoin they mine.
So you're getting on the holder versus the seller.
Kind of. The idea is if Bitcoin riffs higher, Tomorrow Holdings benefits massively from its holdings, driving the stock. The competitor selling its Bitcoin might still benefit from higher prices, sure, but maybe less dramatically than the one holding a huge inventory.
So you're playing the difference in strategy and balance sheet exposure to Bitcoin itself.
It's speculative, obviously. Depends heavily on Bitcoin continuing to go up and the market differentiating between these holding strategies. But it's grounded in what we heard on the call about their conviction in holdings versus peers.
That is definitely plausible yet outrageous. A pure play on Bitcoin price appreciation reflected differently through minor strategies. I like it. Okay, so wrapping up our deep dive on Tomorrow Holdings.
Yeah, the Q1 call really showed a company navigating that crypto market choppiness while executing a pretty ambitious long-term strategy.
Focus on low-cost power, tech innovation, vertical integration, and that big bet on Bitcoin itself. The potential AI angle adds another layer of intrigue for the future.
Definitely one to watch how they execute on all these fronts.
Absolutely. Now, remember, everyone, this was just our analysis of the earnings call information. Any investment decisions should always be based on your own thorough research and your own risk tolerance.
Do your own homework.
Thanks for tuning in to TalkTickers.